Hey, what's going on? Scott Taylor with SanDiegoRealEstateHunter.com. In this video, let's talk about the 3% down conventional loan in San Diego. The great thing about this loan, just as I mentioned, you can put down as little as 3% up to about a $510,000 loan amount, which is about a $525,000 purchase price. What's also great, between that $510,000 loan amount to the $701,000 loan amount, you can put down just 5%. So purchase price wise, 3% down up to about a $525,000 purchase price, 5% down up to about a $738,000 purchase price. And of course, as I've mentioned quite a bit, you get to take advantage of the extremely low interest rates that are going on right now. Some of the lowest interest rates we've ever had on record. As you watch this video, if you're liking it, I'd really appreciate a thumbs up. Subscribe to get more videos just like this and hit that notification bell so you're always alerted as soon as I create a new one. Without further ado, let's jump into what the conforming loan details. So you do not need to be a first-time home buyer for this program. If you owned before, great. If you've never owned, great. If you currently own, no problem. This will work on your own home, so primary residence or owner-occupied. It works on a second home, works on a vacation property, and it works on investment properties. Obviously, for a second home, vacation home, investment property, gonna need some more down, more cash reserves, a little bit better credit, but it works on everything. Now, this is for a livable home, PUD, which is a planned urban development, townhome or condo, okay? And a livable 2-unit, 3-unit, and 4-unit. I do not personally deal with land, mobile homes, or manufactured homes. So as I mentioned, the minimum down payment needed is just 3% if we go up to a $510,000 loan amount, which is about a $525,000 sales price. If you look below the video, there's some more notes, some numbers that I'll be going over, and some links into some other things that I'm talking about. But let's get down to some down payment. So 3% down on a $300,000 purchase is $9,000. On a $350,000 purchase, it's $10,500. On a $400,000 purchase, it's $12,000. $450,000 purchase, it's $13,500. On a $500,000 purchase, it's $15,000. And on a $525,000 purchase, right, sales price about the max for 3% down, it's $15,750 down. Okay, so now let's look at from the $525,000 sales price on up to about a $738,000 sales price and see those numbers, because don't forget, it's 5% down. So at $550,000 with 5% down is $27,500 cash out of pocket. $600,000, $30,000, $650,000, $32,500, $700,000, $35,000, and $738,000, 5% down, that's about the max sales price, is $36,900 down. Alrighty, so now let's talk about the conforming loan limits in San Diego. So we have the max conforming loan limit, as I've mentioned, at $510,400. That's with the 3% down. If we look at max super conforming, I hate these dumb names, but they're not my names. I didn't make them up. If we look at the max super conforming, right, from the 510 to the 701 loan amount, that's 5% down. The max loan amount for a 2-unit is $898,000. The max loan amount for a 3-unit is $1,085,000. And the max loan amount for a 4-unit is $1,349,000. The great thing about this is the max debt to income ratio allowed. It's just been raised here a little bit, but generally speaking, right, depends on your credit and some other things. Generally speaking, we can go up to about a max 50% debt to income ratio, okay? Here's what that means. Once I pull your credit, we add up all the minimum monthly payments on your credit report, plus your future housing payment is your total debt, divided by your average gross income, right, gross before taxes, over the last 24 months. So debts divided by income is your debt to income ratio. So this loan works fantastic for anybody that's had a full-time job or business for 2 years or longer. And like I've mentioned, it's not limited to first-time home buyers, those with limited income, or those with less than perfect credit. All right, here's the cool thing as well about the down payment. So the down payments, right, either 3% or 5%, can come from you, so cash from your bank accounts. It can also come as 100% gift funds from parents another relative, an employer, an approved charity group, or a government home buyer program like the ones I talked about quite a bit as far as down payment assistance. So being approved with over 40 different wholesale lenders, I have a variety of conventional lenders that require different credit score minimums, right? Up to 40 different wholesale lenders. They all require a few different things as far as credit score. But generally speaking, it's about a 620 or higher credit score. So don't forget, if it's just you, we use your middle credit score. If it's you and a co-borrower, we use the lowest middle score on that. So let's talk about the waiting periods for a conventional loan. If you've had a Chapter 7, it's 4 years from the discharge date. If you've had a foreclosure, it's 7 years. And if you've had a short sale, it's also 4 years. Now, I want to go into briefly some of the most popular questions that I get and answer those right now, as you might have some of the same questions as well. So one of the most popular questions, of course, can I use the conventional loan in conjunction with your down payment assistance program? Yes, that's exactly how it works. So we use a down payment assistance program to cover your down payment. Then we use an FHA or conventional loan, but we're talking about conventional to cover your actual loan itself. So you get 3% to use loan for your down payment. You get 97%, right, conventional loan, just like we're talking about, up to about a $525,000 sales price. Now, going from the $525 up to the $738, it's kind of hit and miss. These programs sometimes are kind of hit and miss. If there's anything going on in the world, unemployment, COVID, lockdowns, sound familiar? Right now, we're in a time frame where we cannot do what's called the super conforming 5% down payment assistance, right? But check in with me. That comes and goes quite a bit. Another question. If I had a conventional loan before, can I get one again? Yeah, of course. You generally can have as many conventional loans as you wish, right? So that means could mean you have one for your primary home, right? You might have a second home someplace else that's 50, 75, 100 miles away, or in the mountains, at the beach, like in the desert, etc. You could have a vacation home, and then you could have rental property, right? Like a lot of people obviously buy rental property. You could do that with a conventional loan for your rental properties. Another question, why would I go with a conventional loan at 3% down over an FHA loan at 3.5% down? Well, with the conventional loan, so with the FHA, you have what's called the UFMIP, upfront mortgage insurance premium, 1.75%. Conventional loan upfront doesn't have that whatsoever. Also, generally speaking, because with the conventional loan, you need a little bit better credit, the monthly mortgage insurance on the conventional loan is lower than with an FHA loan. So you do not have the UFMIP, and you have much lower mortgage insurance monthly over an FHA loan. Okay, Scott, you mentioned the positives. What are some of the negatives? Well, loan-wise, I don't really see anything, right? So the down payment is 3% minimum. You can use that in conjunction with the down payment assistance program. You can take advantage, obviously, as we already know, of the record low rates. I would say one thing that people talk about is not understanding mortgage insurance on loans. So generally speaking, if you put down less than 20% on any loan, generally speaking, you're going to have mortgage insurance, right? That's insurance that you pay on a monthly basis for the lender in case you foreclose, short sale, etc. Here's the thing. If you have mortgage insurance, your rate is lower. I do have loans, if you put down low, with no mortgage insurance, but guess what? Your rate is higher. So get out of the mentality of, I don't want mortgage insurance necessarily. The whole idea is to have the lowest monthly payment possible. Another question, if I have just enough for the down payment, is there a way I can get my closing costs covered? So yes, don't forget, with the down payment assistance, sometimes we can get a down payment assistance loan to cover closing costs. We can also ask the seller, I'm licensed to do real estate, I'm licensed to do a loan. When you work with me, it's a one-stop shop. We can also write your offer where we ask the seller to pay all or part of your closing costs. And thirdly, we can use what's called a lender rebate. You might qualify at this rate. We do your rate a little bit higher. That difference, we get money on the back end. It's called a lender rebate. We use that lender rebate to cover closing costs. So an easy scenario, let's just say that you're putting down 3%. Let's just say we ask the seller to pick up part of your closing costs, then we'll just use a lender rebate to cover the other parts of the closing cost. All right, cool. Let's talk about your steps to begin. So go to my main website, SanDiegoRealEstateHunter.com. Look below this video. I'm sure there's going to be links, or go directly to ScottsLoanApp.com. In 10 minutes or less from your computer, smartphone, or tablet, you can apply online. Completely safe, completely secure. From there, you upload your needed supporting documents, things that I already know that you're going to have that you can get in 10 or 15 minutes. A copy of your driver's license that you can take with your smartphone. Last 30 days paychecks. I'm sure your work emails, PDFs of your paychecks, last 30 days. Last 2 months bank statements, all pages. Log in wherever you have bank accounts. Save your last 2 months via PDF. That's all we need. Last 2 years taxes and W-2. And don't forget, if you don't have those, look below the video for a link, but also Google IRS tax transcripts. You get them completely free online. And then lastly, if you have anything like stocks, bonds, mutual funds, 401k, etc., you upload that. So basically 5 main documents. Once you apply for the loan, once you upload those supporting documents, I check everything over just to make sure it's even possible. Then I run your credit. With your credit, we use the lowest middle score. I add up your minimum monthly payments on your debts, plus your future housing payment divided by your average gross income is your debt to income ratio. I put together your loan, and then I send back to you what we can do as far as max loan amount, as far as approximate interest rate, because don't forget, we're not locked in, as far as money down, and then how we could structure the offer to limit your cash out of pocket. So don't forget, if you want other videos on this, we're talking about the main guts of the conventional loan. I also have one about loan secrets on it that I don't think you should miss. Common questions and answers, different than what I just went over right here. And loan documents that you're going to need potentially on your credit report. If you have a couple other things, we might need a couple other things, and then I will go into that. Don't forget, if you like that video, I'd really appreciate if you smash that like button, subscribe to get more, tap the notification bell so you never miss an episode, and don't forget, I'm here to help. Licensed to do real estate, licensed to do loans. I would love, should I say, to help you buy in San Diego. Of course, I would love to talk with you soon. Long video, I get a little tongue-tied. I would love to chat with you sometime soon. Shoot me a call, email, or text. Thank you so much for watching the video.